Today I'm going to show you very quickly how to find a setup in Zoom. We're using a 10-day, 10-minute chart zoomed in with Fibonacci candles. So what I want to see is my downward swings getting smaller and coming down to a higher low. And I'll show you how I would find that. First, I want to find a regular intraday downward move. I don't want to use a huge one like this one, and I don't want to use a small one like this one. I want to use a regular medium-sized downward swing. I'm going to use my Fibonacci extensions to measure that and project it off this high point. Now we can see this weakness into the close and a huge sell-off and market open the next day. So just because you see the market make a huge sell-off doesn't mean the market is broken and you can't find any good trades. Often when things sell off big time, price becomes more attractive, investors want to buy in, so this can lead to a great setup. So should you just take a position here and ride it up? No, because there's no risk assessment involved. That's not my style of trading. I like to wait for a selling pressure to lose momentum and downward swings to get smaller. So once we see price push down and push back up, we activate our Fibonacci extension and project it off the highest point. Now we can see our downward swings are getting smaller. Obviously they're getting bigger if you look at these, but we're looking at the overall downward swing, and this high does not breach this high. So this counts as one downward swing. Now I like to wait to see price close above the 618. So you can see it does here, pushes down obviously, but then does close above. So our downward swings are getting smaller. Plus, we are coming down to a higher low. So our downward swings are getting smaller, we've come down to a higher low, and we're closing above the 618 extension of our previous downward swing. So those are 3 points that would determine an entry to me for a long position. I'll remove all this. Now that you've got your entry, how do you determine profit targets? You simply take a measurement from a low to a high and then project it off of this low. So now you have points where you can close out your position for profit on the way up. I like to close them out of all these lines because they're all strong potential resistance lines. Obviously we're not finding much resistance at any of these lines, probably because of this huge sell-off when we flushed out all the orders, so the stock can move higher. But I like to close out some at the 282, 618, 100, 1282, and 1618. Obviously this is a perfect example and not all plays are like this, but this play with downward swings getting smaller, coming down to a higher low, repeats itself often. So if you can study this, you'll be able to find this in many time frames, 4-hour chart for longer swings, 20-day 1-hour chart, 15-minute chart, all kinds of charts. It repeats itself over and over again, so if you can memorize this pattern, wait for it to play out, wait for your downward swings to get smaller, wait for a close above the 618, and then determine your profit targets, you will be able to replicate this in your own trading. So I hope this helps.